The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business. From $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate. I'm your host, Tim Calloway. I have a very special guest today, Curtis May of Practical Wealth Advisors. Curtis works with individuals and families who want to be financially independent, usually prior to the age of 65. They're business owners, investors, families, people just like you and I, who are tired of giving up control of their hard-earned money to strangers. Curtis, welcome to the show.
Tim, thanks for having me.
All right.
After much complication.
What's that?
I said after much complication. We had a little technical difficulties, but yes, I'm excited to be here and tell you both things I know.
Fantastic. Well, I look forward to it, and I have some familiarity with it, so I'm excited to kind of hear your story. Let's start with how'd you get started? I mean, what was your, how'd you get started in the industry, and then, what got you to where you are now?
Yeah, so I got started in the financial services industry. It's back up. So my family had always been self-employed, right? So we owned a supermarket growing up. I'm from Philadelphia.
Okay.
We were in the bar business. So my dad, we were always, I guess, in real estate. We're like McDonald's. So he would buy mixed-use properties, but they would have a bar, like in Philly, corner properties with the retail downstairs and the apartments upstairs.
Right.
We would never develop
a cornerstone business.
Yes. But so in it's like a corner store. You should know Philly because Philly has row houses and then and so you'd have the second would be dwelling space, and the bottom would be the store. So there's a lot of like stores, bars with the your grocery business at the bottom. You lived over top back in the day. So my grandfather was in that business, had a house next door, a corner store that put him and 4 kids, served them. And so I grew up in that business. So I always say I never got that go to school, get a good job talk. And so I got into industry in the financial services industry in 1985, got my insurance license. And when I realized the NBA was not looking for 5'11" shooting guards. Okay. So I need a new dream. This is not going to work out. Right. The ability to make money, the ability to control my schedule, and the ability to, if I could get good, I could have no limits on my income. That appealed to me. And what appealed to me was learning and then teaching people about money. What I learned in around 2000, I read Rich Dad, Poor Dad. And then I realized most of everything that I was doing, because I was a typical buy term investor difference, max out your 401k,
right?
Mutual funds are our end all be all guy,
right?
Okay, and then I kind of had I'll call it Saul became Paul moment,
right.
In terms of I realized most of what I was doing was different, was incorrect, and start digging into. I found this little book called Become Your Own Banker. I discovered Kim Butler, who was on one of Kiyosaki's early tapes, Choose to Be Rich.
Right.
And talking about, the asset classes, business, real estate, paper. And she was on there talking about paper and talking about velocity of money and permanent insurance strategy. Like, well, this is different. And I didn't understand it all, but it started me to dig it. Right. And then probably around 2010, I got full bore into what I do now, which is, teaching. Y'all may have heard something called infinite banking. But that's actually step 2 in our system, and I teach the private reserve. But I teach our clients that there's 4 asset classes, right? Business, real estate, paper, and commodities, right? And so you need to pick a horse and ride it, but your goal is to become financially free, right? Financial independence. And I was just on the phone before we started this call. It's like, well, what's your fastest path to cash? Right, is what you got to ask yourself. What do I know how to do now? Like, she wanted to do real estate, but she didn't really know how to do real estate. But she had a successful, some other little business, pop-up store, online business, but she felt she didn't know how to manage the money. So she shut it down. So she's trying to learn how to wholesale and flip. And I said, yeah, you should do that. But what can you start up where you can make money in the next 30 days?
Right.
She said, well, the thing I was doing, well, let's do that. I can help you fix the financial illiteracy part. Okay. I need you to make money. She said, oh, I can make money. Well, the 3 skills of money are make it, keep it, and grow it. Curtis is the keep it guy, right?
Right.
So that's a long intro, but that's
no.
That was a conversation I just had literally like 5 minutes ago.
That's a great conversation, and I always say, Curtis, that one, there's really only one playbook for life, but unfortunately, most people don't read that, right?
Right.
So, and there's really no playbook. Well, actually, there's millions of them, but nobody ever sits down. And most parents, unfortunately, I have 4 sons, and I've done the best I can to kind of guide them. Really to have that playbook, right? For finances. Life's a different story, but finances, they don't teach it in school.
Well, it's funny. It's in the original playbook you're describing.
Yeah, it is. Yeah, I have that discussion with my spouse all the time.
Right.
No, it's right here, and I go, oh, you're right.
Or your pastor, right. I always tell people, if you go to Rabbi Lapkin's "Thou Shalt Prosper,"
right?
And I was speaking at a women's conference, the first lady of this church, and I was like, have you ever read "Thou Shalt Prosper" or listen to my Reverend Myron Golden? And I said, how do because the Torah is basically the Old Testament, right? And so, okay, why do other groups get the money lessons that everybody else misses, right? Because they mentioned gold in Genesis like 8 times. It's not as a bad thing, right? So not to go sideways like that, but you got, because see, when I talk about principles-based planning, so we're talking about the Bible, all right? So let's put it out, right? So what happens is, I'm very silly, y'all. There's principles. So I teach principles-based planning, right? Principles drive strategy, and strategy drives tactics. Like tactics are product that you buy. Too many people are focused on tactics. They're tactical, but they have no strategy and they don't have any principles. So when we talked about the playbook for life, there's something called the 10 Commandments. That's your playbook for life, so you can live a good life, a good, doing to others as you have them doing to you, all that kind of stuff. And that's missing in this society. Okay. Right. And so if we got that together, a lot of things would improve, following the Constitution. But anyway, so I have financial principle, go into in a minute, but I think you have to start there, because see, if you do unto others that you have them do unto you, you don't even need laws like fiduciary laws, because everybody's operating. How do you not operate from a fiduciary standard, meaning that you treat your clients, you do what's best for your clients? I mean, that's just morality. I mean, how would you not do that? Apparently you have to make a law about it, but I don't know how you not operate like that in everything.
Somehow, somewhere along the line, you and I could probably sit here and wax philosophical, about the past 100 years, industrial revolution and politics, and see where it was lost. But you're right. I mean, if you keep those principles as principles of your life, then the financial part of it takes care of itself. Yeah. Unfortunately, it just doesn't seem.
Well, that's why they need us out here on the air.
Right. That's good to hear, man. So keep going. I'm not going to stop you.
So the principles, let's talk about the financial principles.
Okay.
Because one of the things I try to share with people, the financial plan precedes the business plan and the investment plan. Everybody wants to start right into investments, right? And so I'll get people, they're good at what I call principle 5, right? Real estate investors, right? Which is velocity of money, velocity method, right? But they're skipping steps. So what I try to do is help people backfill, because I want you to build a house on rock, not on sand. Okay. And so there's principles that we try to teach. And so if y'all have ever read The Richest Man in Babylon, The 7 Cures for a Lean Purse, basically Curtis teaches chapter 2 of The Richest Man in Babylon, right? And but we've boiled them down into a system we call principles-based planning. So we break ours down into 5. Save, right? Save what? 15% or more of your gross income. So if you make 100 grand, guess what? Curtis wants you saving 15,000. Right. All right. And why? Because you need to exercise that, it's not, you won't get rich saving money, because there are people like trash is cash. But I'm not talking about, you can't accumulate your way to wealth, right? But I want you to have, when I'm talking about saving, I mean the verb of spending less than you make and capitalizing your system so you have money to do what? For emergencies and for opportunities to buy or build cash flowing assets. That's why you're saving. That's step one. That's where the game starts, right? Now, to do that, the other thing I find, Tim, is that they don't manage cash flow, right? So if y'all have ever read, I'll throw a couple books out. Profit First, or better yet, Profit First for real estate investors. That's better book, okay? And learn, because most wealth is lost by how people manage cash flow. So I have a system called cash flow mapping where we teach, that's a tactic, a strategy, right? We teach a system of, for most times, as I've been doing it the last year, I realized, all right, I'm starting with cash flow even before I get to the principles, because I got to figure out, what's coming in and what's going out. Because people say, people say, well, I don't know where my money goes, right? How do you know if you're wholesaling or you're flipping business is profitable? Because you don't know. And you could be supporting one with the other. That's what he talks about in the book. You just don't know what's good, what's marketing working, or what's not, if you don't track it, right? Financial literacy is accounting. People say, I need to work on my financial literacy. That doesn't mean investing. Financial literacy is accounting, right? And because most wealth is lost there. The second principle, I'm not going to wax poetic, is protection, right? You have to play defense, right? So when I talk about protection, we take people through a process where we look at your auto. I want to make sure you've got maximum coverage on your auto, because if you don't have that, you can't get umbrella coverage. People say, oh, I got 3 LLCs. You're for that's limited liability, right? So your first line of defense is insurance. You need $1 million, $2 million of umbrella coverage, right? But if your auto insurance is too low, you can't qualify for the other one until you raise your limits. So we teach people how that works. I want you to have, replacement costs. See, the principle is maximum protection. See, we want to get the minimums of what we can pay with, but you leave yourself vulnerable to attack, right? Disability. What if you got hurt? Auto, home, state stuff. That's protection, right? Trust. There's different types of trust. There's for not liability, estate planning, right? Reverse, revocable, irrevocable. These are attorneys. I don't do all of it, but Curtis quarterbacks all of it, right? I make sure those discussions happen, and I'll either work with your person or introduce you to a person that'll do it for you. Then I had a great guy, guest on my show. I think it's Brian Denby on who you should talk to. We did a great talk on asset protection trusts for real estate investors, and people will go to the tactic. I need a trust. Well, you know about trust. You think about trust. No, what do you think about trust, and what do you need depending on where? Do you own like 4 properties or less? Well, you need this. And then if you have this many, now you start thinking about this. And now as you're bigger, and what he does is on my show, he breaks it down like, boom, here's where you are. Here's what you need. Here's where you are. Here. It was awesome, in terms of getting contextual. That all falls under my principle too, by the way. And then there's life insurance, right? So maximum protection, if you're like between let's say 30 and 40, 20, let's say 20 and 40, I won't say you can have your annual income times 25. Okay. If you're 40 to 50 times 20, if you're 50 and over times 15. So that's what they call in the industries, your human life value. Right. And so most people aren't protected because you're saying, well, I got this real estate, my wife or husband will be fine, but that's not liquid. So you need to create what if you could create tax-free liquidity in your estate, because your spouse may not know how to do it.
Right. I think most people don't realize the value of good life insurance. I mean, the tax-free implications, the avoiding probate, all of the beautiful.
And that's just on the death benefit.
Right. That's just on the death benefit.
That's just on the death benefit, which has a lot of value. Now I teach the living benefit because then my clients buy real estate with the cash values from their policies. So that's the strategy.
That's even better,
called infinite banking. Because I ask people, so where do you store your cash? Like your wealth has to be warehoused somewhere. You want to store it in real estate? Well, equity has no rate of return. You have to qualify to get it back out. You want to store your equity in stock market? Well, that's
good luck.
good luck with that. That's risky.
Your
If you're going to
timing better
gamble,
be your timing better be perfect. I mean,
right,
that's the thing about stock market. But go ahead.
listen, last time I checked, I didn't know anybody had a working crystal ball. But if you have one of those, the stock market's fantastic.
Well, the worst part is the people that okay, yeah, I've been in this 401k my whole life, and then they roll it over when they leave their company, and all of a sudden there's a 2008, let's say,
Yep.
and all of a sudden it's worth half as much, and they go, oh, wait a minute, I can't retire the way I had planned for 30 years, and don't understand the principles of moving money around prior to. Yeah, but go ahead, you're doing great, but
that, and see the other challenge is because I teach you how to. First of all of that falls under what I call the accumulation theory, right? Buy and hold, dollar cost average, get out of debt, rule of 72, magic of compound interest, buy term investor difference. And that strategy is this. First of all, it doesn't work. Let's start with that. Okay. All right. So I'm gonna step on some toes. Okay. And
making somebody angry today.
All right. It doesn't work. Okay. I've been in business 35 years. I've forgotten more about buy term investor difference than all of y'all listening know. Okay. And I've been in the industry long enough to see, because the argument is, well, this company's work with nobody invests the difference. That's not the problem. I don't care if you invested the difference. Okay. I was talking to a guy and he was like, yeah, well, if I because he wanted to hear about the insurance infinite banking. Well, what's the return to policy? It doesn't matter really. Okay. And then he was like, well, I can get 12% over here and such and such. I said, well, okay. And he pulled out his little Excel spreadsheet. I said, listen, dude, that doesn't mean anything. That's math. That's not how money works. Okay. Right. If you had $10,000 or $100,000 in the market and your portfolio, I don't know, has it ever dropped by half before? Right. And so I said, so if you got 50,000. So I said, or 10, if it's 10,000 dropped to 5, put your own numbers in there. What rate of return, I asked them, do you need to get even, not making money, just get back to where you were? Right. People don't understand that math. 100%. That means that fund manager's got to hit a home run.
Right. The way it works backwards, if you're down, the way it works backwards and trying to compound back up is a huge mountain to climb.
It's a huge, and so you could say, well, my perspective says I'm doing 10, 12%. That's 10%, 12% that year, because it's not an interest rate, it's a rate of return. Because people think, mutual funds earn compound interest. No, they don't. They go up, they go down. They appreciate, they depreciate. Most registered reps don't know that.
Right. I believe it.
It's amazing. Oh yeah, because they'll show the rule of 72, and then they'll show a prospectus and or your 401k thing. Okay, well listen, this did 12%. So that means that if it averages this, your money will double every 6 years. But that's math. That's not money. Okay, because the average doesn't mean I can show you average 25% and make no money.
Right.
It's true. And I have a video on there. I did that on my YouTube channel somewhere called Actual versus Average or Math versus Money. And so it's like you've got to understand. So even as investors, you've got to understand, the financing part of your deal, right? Because you see the house, for example, I'm shifting gears mentally. I'm still on so let me finish the principle because I'll go off on different tangents. So principle 4 is liquidity, right? 6 to 12 months of liquidity for emergencies and for opportunities. What if we have another? And now there's precedent set that the government feels that they can intervene, okay, let's just say, in your life, and to make it legal for your tenants not to pay you. But the mortgage companies still want their money, don't they?
That's right.
So if you don't have liquidity, what's the term? SOL, right? You're in bad shape, right?
Like Chuck.
Right. and so you got to have, because if you have the liquidity, you can cover it, because especially if you do good tenant selection. Now you can cover it, or better yet, you can take advantage of opportunities of people that are strapped for cash that all of a sudden need to get rid of their property, and you can now get it, at wholesale, right? Because you had the ability, you had access to capital on the day they needed some money, and you could get to it. See, most people are afraid to capitalize. You don't need to be fully invested. You need to have, Buffett and Apple are sitting on billions of dollars of cash.
Sure.
And they have Buffett. I mean, Apple has the money, but they still borrow.
Right.
And so that's the difference between, principle 5 is velocity over accumulation. So the velocity method, if you study this, most of y'all listeners already know this. Velocity is just so the Burr method in real estate is velocity, putting money in, refurbishing, getting your money out, moving into another deal. You want to spend money. How many times can you turn over that dollar? It's not about compound interest, right? You're in it for the long term. No, you want to get your money back out, still have that asset you bought throwing off cash flow and equity, and go get another one, right? And so money likes speed. And then cash flow. See, if it doesn't cash flow, to quote Kiyosaki, it's not an asset. Asset is something that puts money in your pocket. Or if it does cash flow and you don't make any money, it's not a good asset, right? I call it a non-productive asset. So, and then understanding under velocity, the difference between debt. What is debt? Like, most people think, oh, I got to get out of debt. You don't. If you have a property that has a value of $300,000 and you have $200,000 mortgage, you are not in debt. Right. You have a liability against an asset, right? And your tenant's paying for it. What's the hurry? Right. And the Fed's destroying the debt for you. All right. I mean, you have to understand, you're not trying to pay extra on the mortgage. I know real estate gurus, let's double down and get this mortgage out so you get all the cash flow. Why in the heck would you do that?
People don't understand the concept of the value of money, cheap money.
Opportunity cost, right? They don't understand opportunity cost.
It's so low, even now, even with the past 6 months, 9 months of the Fed. You and I are old enough to remember the 80s, right? I mean,
yes.
I remember 17%.
Yes. But see, you know what? On the flip side, right? Yeah. What were CDs paying? 15%?
Right.
Yeah, I remember when I was coming out of high school. Right, money market accounts paying 21%. Money
market accounts paying fat money just to sit there, and we
annuity CDs were 8, 10, 12%. Right, and so there's interest is two sides. It's the rate of return and what you're paying. So you have to look at it as two sides of interest. And so you want to be on the receiving side. That's why we teach people to be the bank. We say, look, it can be a customer of the bank, or you can be the bank, which just means it's a store. Banking is like storage, right? Blood bank, food bank. Right. And so what we teach is this falls under principle. What starts as principle 1, save. Principle 4 is where do you store your cash, properly structured, dividend paying whole life. That's a tactic, right? And the strategy is to manage your finances, like borrow the bank's business model, because all banking is building a pool of capital that you control, right? And because all your money is already going into somebody's bank, you just don't own the bank. What if you could create a pool of money that you controlled? And because everybody's chasing investments, but 35 cents of every dollar is leaving your house in the form of debt to others. What is the first thing you do is recapture that money and become more efficient. Right. And so I teach people, if you want to create maximum wealth, you have to start out by stop giving your money away. You want to create maximum efficiency, manage your cash flow, get that 35 cents coming back to you, get somebody to help you minimize taxation by understanding the laws and the rules, looking at fees. Right. I'm doing this thing right now where I'm helping people with the employee retention credit, so I'm a consultant with that. And, you can get back. It's like the, if you're, like I say, if y'all have businesses that are where you had W-2 employees and they're looking at like the what are those things called? Second, third, and fourth quarter of 2000, and the first, second, and third quarter of 2021. I just this morning went to an interview with a person at a home healthcare agency that had 15 full-time meaning 30 hours W-2 employees, and we do initial analysis on his program. I'm getting if all this stuff checks out the way he told me, he's going to get a refund, not a loan, right? Not a forgivable loan, a refund of $233,000.
Oh wow.
So you should hit me up if you want to hear more about that. But you gotta have W-2 people. But the thing is,
you're start ringing right now.
Right, exactly. But what happens is, what you gotta do is you gotta there's stuff out there. So like to me, if you want to create maximum wealth, you gotta find money that you're losing unknowingly, unnecessarily. So we kind of walk people through a process where we look at everything and try to improve your current cash flow, give you more and better benefits, and protect minimize future and current taxation. And so it's like, it's a couple of meetings. It's not all at one thing. Cause I just said a lot.
Right.
Tim, thanks for letting me going on what I call a Curtis rant. So you feel
No,
free
I
to
love it.
rein me back in. Okay.
No, okay, I'll rein you back in a little bit.
All right.
Tell me where Practical Wealth Advisors are going to be moving forward. I mean, there's a lot going on in finances right now. There's an interesting overall, I think, banking system. You said something that when you were, explaining kind of what you did, how the government has decided they can move in and dictate, really what happens with your money if you're a real estate owner and you're collecting rents. So there's just so much going on, and there's got to
Yeah.
be. I'm not kidding about your phone should be ringing off the hook because everybody I talk to, they're just kind of like, I don't know what's going on here. I don't know there's a lot of I don't know, I don't know, I
Right.
don't know.
Right.
Where do you see not just like overall in the cash world and the money world, but with with your company and where you're going and what you see happening?
I'm going to kill it. Okay, we're
Okay.
good.
There you go.
So I whatever recession there is, I've already chosen not to participate. Okay.
Right. No
And
recession in this house.
yeah, because there's no recession. My business went up in
Right.
COVID, right? Because I decided that, all right, because my business is teaching you how money works and helping you save money. So as long Dan Sullivan has a little book called Building Cash. Oh, what's it called? Cash Confidence, right? And so I look at my business is helping you reach your aspirational goals. So my focus is helping you win, helping you improve your cash flow, helping you improve your vision, helping you get better every year. So there's no limit to that. So because I teach people how money works. So what happens is if you say, all right, you have to what's the word? I call it building I stole this from Jamie Dimon, but I help people do it on personal finance, building a fortress balance sheet, right? So you need to build a financial fortress so that if things, because what is Jim Rohn says, the winds of adversity blow on us all, but the difference is how you set the sail.
Right.
Okay.
If you're gonna
So
capture that and
right. All I do is work on Curtis. Can Curtis set a better sail? Okay. So if you want to be, I heard this from Myron Golden, you want to raise responsible kids. So I break it down. I've been teaching our clients this responsible. If you break it apart, it means to respond with ability.
Right.
Right. So to quote my favorite philosopher, Jim Rohn, says, to don't wish it was easier, wish you were better. So you need to work at getting better. I work at getting better every month, every quarter, and what did I learn? How can I improve my business? How can I protect myself? How can I help my clients protect themselves? And I work at learning new stuff and teaching new stuff, to people. And so what happens is if you look at your personal economy, okay, here's the wins. Inflation. Okay. Well, inflation hurts some people. Inflation helps real estate investors, right? Because when you see rates double, from 3 to 6, I mean, the payment didn't double. The payment went up by like $175, right? And the rents went up 20%. Okay. So stop panicking. Okay. You don't have to wait for rates to go down. The rates don't matter. Okay. As long as you're profitable. As long as your thing cash flows, so that's you getting good at your numbers. You don't sit and suck your thumb, you just and hide. There's still deals out there, maybe less of them, but most people also go into hibernation. So
that's a good thing. I mean, it's time to go to work then.
It shakes out the wannabes.
Right.
And for the professionals that are in it, understand that, most wealth is made in down market. So you have to position yourself to win. Okay. You got to protect yourself from taxes, from lawsuits, from down market. So I call it that's principle 2, playing defense. Right. And principle 1, building your liquidity. Well, by saving, being liquid, because if you have money, opportunities will find you. You don't have to go looking. They're like, you'll have what I call the cash flow glow, and people will bring deals to you if you put yourself in what I call target rich environments, where you have, because money follows value, right? So as long as you can, people say I need to make more money, I always tell them that's the wrong question. It's what specialized knowledge do you have? Are you pleasing your fellow man, right? Because are you being of service? That's where money comes from. And so there's nothing wrong with making a lot of money or profiting, because I was just reading this quote from the Atlas Shrugged by the at the wedding quote, and he says, "Well, if money's, you say money's the root of all evil. Well, what's the root of money?" Okay,
Right.
right,
It's
and
actually the love of money is the root of all
the
evil.
love. See,
Yeah.
get that wrong, right?
Right. They get
Which
that
is
wrong too.
basically
Yeah.
have no idols before me. Don't make money an
Right.
idol. That's what
Right.
what it means. And people take all kinds of stuff out of context. And don't get me started, 'cause I was about to go another. But yes, they take stuff out.
We were running out of time, Curtis.
Right. So, but anyway, yeah. So when you just think about how to, what are the opportunities that open up, right? Because there's always opportunities, and so you have to keep your eyes. It's like a quarterback, right? You have to look. You can start scramble and looking to run around. If you keep your ideas, your eyes down the field, you'll find somebody that a receiver got open,
Right.
and you can make a good play out of a busted play. So you have to always look downfield, looking for opportunities, and you're positioned. You are able to respond with ability because you've invested in your knowledge.
Right. That's great, man. I think that's very powerful, and something that, especially now, and I couldn't tell you why right now means so much. I mean, that'd be a whole nother podcast.
Right.
But there's just a lot going on, and the chasm between the have and have-nots is growing wider and wider. And people need to start looking out for themselves in each other a lot more. So, I would agree with, well, how would folks get in touch?
See, but here's the, let's
Yeah.
talk about that for a second, right?
Okay.
So when you look at the 99 percenters and the 1%ers, right? Is there something going wrong on nefarious there? Not really. Okay.
Right.
Because if you break it apart, I did a YouTube on this. So I have all kinds of I blow up little myths all the time, right? And because if you break it down, there's a knowledge gap and there's a behavior gap. So nobody wants to talk about that. Okay. If you follow, I don't know if it was Errol Nightingale and Jim Rohn said, if you follow around a poor person, you could observe that, okay, let's not do that. Let's do the opposite of that. Right. And so a lot of times people with means, one, they don't have a scarcity mindset because they understand that it's more than enough for everybody to have more than enough. And a lot of times politicians and, different organizations, they make money by fear and scarcity and promoting that kind of stuff, promoting class warfare between the rich and the poor. Right. But me or you making a lot of money doesn't take money from me, because wealth has to be created, and is created from your ideas, your imagination, the service you're creating, and money's a result of that. See, a lot of people don't understand that, right? And so when you look at what people do at their time and their behaviors, they live in scarcity. They live in consumption. They live in, as opposed to living in prosperity, being a producer, pleasing your fellow man, as Walter Williams would say, and so if we're not focused on that, then you're going to struggle financially. So most of this game is mental. And I used to talk to youth, and I say, do you want minimum wage? I said, and so this is how I tell people understand economics. Not minimum wage is, I know I'm gonna I can get mad at me. Don't get mad at Tim. This is Curtis talking, right? Minimum wage is stupid, right? Minimum wage is discriminatory. If you understand economics, right? Because there's nothing new under the sun. It's just a form of wage and price control, right? So, to me, you have to understand economics. Jim Rohn said economics is major. So if you raise the price, the demand goes down. So if you raise the price of labor, demand for labor goes down because it's a cost, right? So, and if you raise the cost, you hurt the people you're trying to help, because if let's say you're young and you're 12 and you don't know how to do anything, but I like you're a good kid. All right, well, you can come sweep the floor. You can, because we had a store, we hired people like that would help bag up groceries. And my dad was hiring people, we had a little corner store, 12, 13, giving them stuff to do. Well, when you create a minimum wage law, you make it illegal for two people to negotiate what your effort is worth, because you have to have your first job first. And so when you raise the minimum wage, you cut off the bottom of the economic ladder, because I have to pay you $15 an hour, but you ain't worth $15 an hour yet.
Right.
So I can't hire you by law.
Right.
So anyway, that's another tangent, but that kind of stuff. But it's that kind of thinking by politicians, by that not, thinking they're helping, but they don't pay attention to the Basquiat in the law. He says there's a seen and the unseen, right? Nobody, they see the photo ops and we raise minimum wage, but you don't look at the long-term effects of that policy, because by that time they're out of office. And now you got another crop of people trying to fix the earlier mistakes or build on it. Oh, we just didn't do enough. We got to raise it again, because everybody needs to earn a living wage. That kind of stuff.
Fix they know.
That's the only fix they know. Print money.
Right.
And but see, you can take control of your finance. That's what I teach. It doesn't matter what they do. You have to control, because you can't control the economy, but you can control your personal economy, which is your production and consumption as a family. And that's bottom line. What I'm teaching is to learn the game, play the game, become more efficient, be of more service, and listen to what Curtis says to do.
Just do it. Curtis, thanks so much for being on the show. How would someone get in touch with you?
So you can go to the what is it called? You can follow me if you want to hear more of the madness that is Curtis. Go to the Practical Wealth Show. You can follow me on IG, or go to our YouTube channel. Just search for the Practical Wealth Show. In the YouTube videos and on IG, if you click my link tree, that will take you to the show. It will take you to I give a complimentary consultation. Nice. And it will we can have a conversation and see if what I do it resonates with you. We can talk about next steps.
Well, I think we feel smarter already. So appreciate it.
So.
Curtis, has been fantastic. I actually look forward to talking to you again sometime. Have a blessed week, and we'll talk soon.
My pleasure. Thank you.
Have a good one.